Welcome back to the Malaysia Money Matters show. It's the 24th of October 25. Today, we're doing a deep dive into, well, a bit of a split market, really. We've got this huge excitement around local tech, but at the same time, some serious geopolitical stuff happening right here in KL.
Yeah, it's definitely a complex picture for the Malaysian economy right now. If we look at company earnings, though, we're finally seeing the semiconductor sector showing some real strength.
That recovery, that's the big headline, isn't it? The latest results from Malaysian chip players look fantastic. ViTrox reported net profit jumped over 50% in Q3, and UWC, they posted a seven-fold increase in net profit for Q4. Sevenfold.
Exactly. And the key thing here is what that jump really means. It confirms the sector seems to have moved past that big slump we saw in 2023, 2024. Companies are now reporting utilization levels, basically how much of their factory capacity they're actually using, above 80%. That's healthy.
80%.
Yeah, it suggests the inventory glut. The backlog is pretty much cleared. But we should be a bit cautious. There's still this risk hanging over things. Potential U.S. tariffs, President Trump's threat specifically to impose a 100% tariff on chips. That's a geopolitical factor we just can't ignore.
Right. Is that tariff threat something the market is really pricing in now, or is it more, election noise we should maybe filter out?
For now, probably mostly noise, but it's high-impact noise, if that makes sense. The market's enjoying the growth, sure, but it kind of keeps valuations maybe a bit capped. Which actually leads us nicely to THMY Holdings.
Ah, yes, THMY. Their share price almost tripled on its first day of trading. That's the best debut on the ACE market in 2 years. And for listeners who might not know, the ACE market is typically for smaller, high-growth companies, so tripling your price on day one. That's exceptional.
Absolutely. This huge IPO reflects really strong, almost sort of feverish investor appetite for Malaysian tech companies, especially those linked to the global AI spending boom. And THMY is leaning into this. They're saying they'll use the IPO money to build a new factory, aiming to quadruple capacity by mid-2029.
Quadruple capacity.
That's a massive bet on that AI-driven demand continuum, no doubt about it.
Okay, let's shift gears a bit. From tech growth to maybe some domestic risks, let's talk energy, oil and gas. Total upstream investments in Malaysia hit, RM 256 billion between 2018 and 2024. Huge numbers. And Sarawak fields took the biggest slice of that pie.
Those figures definitely show commitment. The strategic importance is still there, but the crucial, so it is about sustainability, about profits. If you look at Petronas' net profit, it actually fell nearly 19% in the first half of 2025.
19% down. Why?
Well, simply because the national profit depends so heavily on global crude oil prices. They averaged around US $71.87 per barrel in that period, which was weaker. So you've got this massive legacy investment being reported, but at the same time, market volatility is hitting the actual profits.
And that volatility seems to extend to corporate governance, too. Look at the drama around K&M Group. Bursa Malaysia has warned MAA Group, a major shareholder, to strictly follow listing rules. This is about that proposed 270 million sale of their German unit, right?
Yes, and Bursa stepping in like this really raises the stakes. They're calling it a major disposal. That means it needs 75% shareholder approval. Now, why does this matter to you? Well, K&M is trying desperately to get out of its PN17 status. It means it's financially distressed.
PN17, yeah.
So this regulatory intervention, it seriously complicates their plan to sell off this key asset. And they've got this deadline with creditors looming, October 30th. It's a real race against time for them.
And speaking of market jitters, look at Perak Transit. Their stock had a massive sell-down, wiped out RM 360 million in market value, hit a 5-year low. And all this happened while the managing director was actively trading shares, selling and buying millions.
Right. And when you have a stock facing that kind of extreme volatility, and the company officially says they don't know why there's unusual market activity, but then you see the top boss trading heavily at the same time, that makes investors nervous. Understandably so.
Yeah.
It raises big concerns about transparency, about governance. Even if management says they're just managing their own holdings, the optics aren't great.
Okay, let's pivot now to the global drivers influencing Malaysia. Big news. U.S.-China trade talks are happening right here in Malaysia. Started today, running through October 27th. High-level people meeting. Chinese Vice Premier He Lifeng, U.S. Treasury Secretary Scott Bessent, focusing on easing tensions over rare earth exports, apparently.
This is significant. It positions Malaysia as this key diplomatic middle ground for the world's two biggest economies. They're trying to sort of salvage relations before a planned leaders summit. The success or failure of these talks here in KL could instantly shift global supply chains, and that directly affects Malaysian manufacturing and trade. It's quite important.
And sticking with diplomacy, but regionally this time, Prime Minister Anwar Ibrahim announced that the peace deal between Thailand and Cambodia, it's almost done. They expect it to be signed during the upcoming Asian summit here in Kuala Lumpur, potentially even witnessed by President Trump.
That would be a major diplomatic win for Malaysia as the current Asian chair. Resolving that long-standing border dispute, especially after those earlier clashes, it adds real stability and, frankly, prestige to the region.
But stability feels fragile when you look at energy shocks again. New U.S. sanctions on Russian oil giants Lukoil and Rosneft. That sent shockwaves, especially through China, a major importer, and pushed global oil prices up 5%.
Yeah, these geopolitical events just keep injecting volatility into the energy market. And that directly hits the crude prices that, as we said, impact Petronas's profits. You already saw Kuwait's oil minister signaling OPEC is ready to potentially raise production to cover any shortfalls. So the global supply and demand picture is shifting again right now. We need to watch that closely.
So what does all this really mean for you, the listener, the investor? It seems like our domestic markets show real strength, particularly in tech, powered by AI. But those gains are, well, very sensitive to these big geopolitical events and regulatory risks unfolding quite literally on Malaysian soil this very week. With Malaysia hosting the U.S.-China talks, are we becoming a sort of accidental geopolitical hotspot? And what does that mean for our local risk premium? Lots to think about. If you want to keep up with how all these global and local dynamics play out, make sure you subscribe to the Malaysia Money Matters podcast.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.